So deadlines right now, basically right now for VAPA, especially if you're in honors dance or honors performing arts, make sure that you're turning that in today. English tomorrow, history, physics, Spanish Thursday, math Friday. Cool. Speaking of that, we have a ton of people who are totally caught up on PT. I am like, yo, major shout out to you. If your name is over here, that is totally 100% fine. It just means we need to get you caught up on PT. It's actually super easy. You just watch the video, take some notes, and then you answer like 2 or 3 questions. So, and for I think for both assignments, there's like a video that shows you how to do the whole assignment. So I would definitely check that out. If you are Lauren or Derek, I didn't get your PT2, but I think I don't know if that was like you turned it in recently. So just let me know if you need any support here. And then if your name is in pink, great job. Super pumped to have all of your work there. So appreciate everyone in this class for really like making it happen for yourself. Good job. And then last but not least, I did pull this one question off of the quiz from last time. This question was generally budgets are created for, and then you had the option 1 week, 3 months, 1 month, or 1 year. The correct answer was 1 month. So I just wanted to highlight that. Lots of us put 1 year. And so I just like, yes, you can make a budget for the year, but it's better if we make it for 1 month at a time, right? So you like reevaluate every month so that you can have it there. Cool. There was an amazing question earlier about like how long is our break? Our break is 2 weeks if you're passing all of your classes, 1 week if you're not passing all of your classes. So if you missed that part, just FYI, that is what's happening. Next week, you will have class if you're not passing. So let's make sure we're passing. Cool. We're done with announcements. So we're gonna move on to our notes, which means I am going to bring up the lovely Stephanie here in a moment. Let me go ahead in order to get us set up. If you could go ahead and make a copy of our assignment for today. You have a section for notes, but I especially need you to make a copy because we're gonna fill in this table today. And I would hate for you to not fill in the table when you could have filled it in during class. Right, so savings, stocks, etc. Cool. And then let me just preview how short our assignment is real fast. We have our notes. We're going to do that in class. We have this table. We're going to do this during class. You have 2 questions you're trying to answer. If you're going to start investing, what's something important to remember? And tell me one thing you learned today. Those are the 2 questions you have to write down. And then you have your quiz. That's 4 questions. And then this asks like, what questions do you have? Right, so this should definitely 100% be good to go for the rest of the day today. Okay. Cool. Stephanie, I am going to toss it to you. Let me go ahead and put this in presenter. And Steph, it is all you, my friend. Take it away.
Okay, so hi guys, happy last week of school. I know everybody's excited, at least I hope you guys are. And to finish it out, we're gonna talk about investing today. Okay, so okay. So it's okay, miss. We pulled these questions from the first quiz. So we're gonna answer when can we start investing, what options do I have when investing, what is crop commodity, and am I required to invest at some point in life?
We're also going to answer questions like, what is investing? Like, how do I do it? What options do I have? But let us know if you have any questions like throughout, and Steph and I can answer them as we
go. Okay, so we're going to start with our investing 101 like always. And as Ms. Mack mentioned, if you guys have questions throughout, put them in the chat, go ahead. This is a very serious and can be very complicated. So don't hesitate to ask questions. Go ahead and interrupt me. Okay, so we're good. Okay, so first things first, what is investing? So investing is buying something that can make you money over time, which at the end of the day, your goal is to have more money than what you started with. And this isn't something that, I can invest right now and by tomorrow, like in 24 hours, I'm going to be $1,000 richer. Like it doesn't work like that. It's truly a journey that you need to have patience with, because there'll be times where you'll lose money, you'll gain money. So you really have to have a lot of patience and don't expect to become like super rich within 2 to 3 days or something. And you are able to start investing once you're 18.
For sure. So it definitely takes time. I love that Stephanie highlighted that. And I also wanted to say that, yes, some people start earlier than 18 and they use what's called a custodial account. Basically what it means is like your parents technically are in charge, but you are the one who's like making the decisions, right? So, and so like the account would be in your parents' name. And then once you turn 18, the account goes into your name. So I know Devin was talking about that this morning. He has a custodial account. So he's not yet 18, but he is still doing some of the like investing and trading. Yeah, it's definitely just like gambling, right? Like you're trying to make more money, but there is the chance that you could lose your money. David, gambling is fun, but you got to be careful. You got to be careful. All right. Any questions on this? Remember, you have these slides available to you. You just click right here. You click on this button, look at notes slides, and you have the slides there. All right. Okay, so this is the section. Sorry, Steph, I'm just going to set this up really fast. This is the section that matches your table right here, right? This is that section. So I don't need or want all of these words to be in this table. That's not what I want, right? But I want to make sure that you have all the titles, right? That you know what each of the things are. And Stephanie's going to go through all of them. And then if you want to put any additional information about their risk or what they are, then you can also put that in this table here, okay? But I do not expect that all of these things will just end up in that table, okay? Do we write this in our notes? You are taking, no, actually for this slide, I'm okay if it's not in like this section of your notes, Mia, and it's just in this table right here. Mia had a great question. Do we write this in our notes? And I'm saying, nah, it doesn't have to be in your notes. They can just be in the table. Yeah, so if you're taking notes on paper, just pause right now and maybe write them. You can write them on your paper and then also write them in the table. But if you want to just write them in the table, you can. All right, back to you, Steph.
Okay, so guys, brace yourself. This is going to be a lot of information. Okay, so we're going to go into like 3 subtitles, I guess, topics, which is savings, stocks, and just other stuff. And so the first one is our savings account, which going back to last week on Tuesday, it's your basic savings account at a bank, which has very low interest and has no risk. This is your money, and this is just money you can't touch. And then the second one would be a CD, which is a certificate of deposit, and this is money that you place in oh my god, I blanked out. Okay, money placed in a specific amount of time, and basically you're given, it can be 3 months, 6 months, a year, 5 years, 3 years. And if you were to take this money out before that time span is over, you are charged for taking it out before the time that you had settled with. And this does have a low risk. So there is a risk, but it's a very low risk. And then the third one is government bonds, which is when you lend that money to the government and they'll be paying you interest semi-annually. And once again, it has a low risk.
So these two are very similar, savings account and CD. Savings account you have, so here, I need to draw like, nah, I'm just gonna do this. Okay, here's my $100. It's this card, pretend it's this card. Here's my $100. I put it in a savings account, it's gonna be $100. There's very, very little interest. Maybe at the end of the year, I have like $100 and like 25 cents. That's how much interest I get, like very, very small, right? So it is making more money, but not a lot more money, right? So now I have $100 plus 25 extra cents. That's my savings account. That's like the lowest possible risk. There's no way I'm going to lose my $100. Okay. If I put my money in a CD, that's like the same thing at my bank. So my bank, in my savings account, I also have a CD. And CD says, I say, okay, I'm going to put this $100 into my CD and I'm going to leave it there for 5 years. And the bank agrees to pay me extra interest because of that deal, right? So like instead of making like 0.5% interest, maybe I'm going to make 1% interest or 1.5% interest, right? So I'm going to make more interest. So maybe now instead of having $100 at the end of 3 years or 5 years, maybe I have like $120 at the end of that time. Probably not that much, probably like $105 or something, but more than if I just put it in the bank. Okay, so that is the difference between savings account and CD. Both of these are in banks generally. Government bonds is basically, I'm going to take this $100, I'm going to give it to the United States government. United States government is going to pay me semi-annually. Does anybody know what semi-annually means? Like think about semi meaning like the same thing as like semicircle. And then annually, what does annually mean? What do you think? Any guesses? Half a year. Yeah, for sure. Good job, Derek. So half, semi meaning half, and annually meaning yearly, right? So half a year. So every 6 months. So I give my $100 to the government, and the government every 6 months is going to pay me a little bit of interest, right? So every 6 months, every half a year, they're going to pay me a little bit of interest, and I'm going to make that money. And at the end of the term, sometimes it's 10 years, sometimes 20 or 30 years. At the end of that time, they're going to give me my $100 back. This was very popular, like in the 1900s, right? Has become less popular now because there are other ways to invest. Okay, so all three of these like teal ones, the like savings section, right? Those are very low risk because, and there's very low reward. Like you're not getting a lot of extra money, right? So you basically at the end of your time, you end up with a little bit more than you had before, right? So that is our saving section. Any questions about saving? If you don't have any questions, feel free to put no in the chat, just so we know that like you're not typing a question. Thanks, Brandon. Feel free to keep asking those questions. Cool. Okay, Steph, talk to us about stocks, what we normally think about for investing.
Okay, so our second little subtopic is stocks. And one of the options that you have are index funds or like mutual funds, which relates back to retirement plans. So this can be your 401k, 403b, or your Roth IRA. And essentially, for your retirement plans, it is when you stop working and you have this money put aside for when you no longer have that income. And this is buying a group of stocks that all balance each other out, and it has a higher risk than your savings, so it has a medium risk. And then your other one are stocks, so like individual stocks, and they will all have a set price. And your goal with stocks should be to buy as low as possible and then sell it when it's as high as possible. So these will always fluctuate, they're going to go up, they're going to go down. And it's really just a matter of your own judgment, whether you think it's gonna go higher than you've seen it, or, you know, if you see it for a certain price and you're like, no, this is as high as I think it's gonna go, then, you know, that's your own personal judgment. So there is a high risk for stocks.
Yeah, for sure. So stocks, if you think about it, if you think about like a company, a company is split into very small little sections and they sell off those little sections, right? Those little sections are called stocks. So when you own stocks, you are like a kind of like a partial owner to that company. So for example, I own a little baby, I own 2 stocks of Snapchat, right? So Snapchat, I kind of own like a little bit of Snapchat, like a very small amount of Snapchat, not a lot of Snapchat, very small amount. So I own a little bit of Snapchat, and I bought Snapchat about 1 year ago for about $11, right? So 1 year ago, I bought 2 stocks of Snapchat for $11 each, right? If you look at how much Snapchat is worth now, so I'm gonna go to my little app, I'm gonna log in. Dun, dun, dun. Okay, so 1 year ago, I don't know if you can see this actually. 1 year ago, Snap was over here, right? Come on, there we go. Like $11, $13. That's how much I bought it for. And now today, Snapchat is over here at $55, right? So now Snapchat is worth $55 today. So if I sold my stock, my 2 stocks, my little parts of Snapchat, if I sold them, I would make $110, right? So I bought them for $22 and I'm selling for $110. Did I make a profit or did I lose money? If I sold them today, would I make a profit or lose money? Yeah, I would make a profit, right? I make a profit. So I make more money. I bought them for $22. I'm selling them for 110, right? So I am doing that. If I hold on to them, they may become worth more money, in which case I could make more money. Or if I hold on to them and Snapchat, like it was going up, and then everyone's like, Snapchat sucks now, right? And it starts going down, right? At that point, that is when I would start losing money, right? Because maybe now I can only sell them for $60, or maybe I can even only sell them for $5. And then I'm not making very much money, right? Or I'm actually losing money from my initial investment. So that's how stocks work, right? They can go up really fast and go down really fast, like we saw with GameStop or AMC, right? And they can also go up really, really high or really, really low, right? And then companies can actually like bankrupt. And that's when you lose all your money, right? So so it's very risky, right? Yeah. We're not going to the moon. But they can either like go really high or really low. And so so what happens with these right here is we group a bunch of stocks together so that they can kind of balance each other out. So if one goes up and the other goes down, then they kind of like meet in the middle. You don't lose all of your money, right? You lose some and you gain some, and then you like gain overall, right? So these are a little less risky, right? When they're groups of stocks, which is what index, mutual, and retirement funds are. They're all different things, but they're in the same idea of things, which is that like we're grouping together stocks in order to like mitigate or like in order to make sure that they balance each other out and we don't lose all of our money because we bought GameStop and then it tanked, right? So that is how that section works. Do we have questions about the stock market? Feel free to ask them. Feel free to come off mute. Cool. All right. So far, we've learned about saving, right? So saving and using a CD, a fancy kind of saving. This low risk, right? Low or no risk, like a good way to keep your money. Stocks can be a good way to get more money, but they can also be risky. You might actually lose money when you do stocks as well, right? So we have like risks here. And then the other subsection is going to be stuff. So Stephanie, tell us about stuff.
Okay, so for starters, stuff, that little stuff section, this is like the extremely high risky portion of investing. So, with saving, you have either a low risk or no risk, and then your stocks, it's just like a judgment type of thing and like your personal opinion, but it does have its highs and lows. So there's, like that little medium risk. But with cryptocurrency, crop commodities, and property, it is extremely high risk. So we're going to start with cryptocurrency, which is putting your money into Bitcoin or something similar and trading it. So this is kind of just like a little chance to make quick money or essentially lose everything. So this is really like a little 50-50. So it's like I could make some money here, or I can essentially be wasting everything and losing everything that I have. And then going back to our questions on the first couple of slides on crop commodities, this is, so as it says in the name, crop. So wheat, corn, cotton, and all of those other crops, and you're selling this in turn into in hopes of getting profit. So the last one is property, and this is homes, lands, rental properties, kind of like going into like real estate and stuff, and turning that into a profit as well.
Yeah, so the idea here is that you like buy it and then you wait for it to appreciate or gain value, and then you sell it for more money, right? So if I bought a house for $200,000 maybe 20 years ago in Los Angeles, that house is probably worth like 500, 600, maybe $1 million even. And so if you bought a house 30 years ago and now it's worth $1 million, now when you sell that house, you've made some profit, right? So remember, none of these things are get rich quick. Like, yes, you can, using stocks, you can day trade, which is like how people try to get wealthy fast, but you are just as likely to lose your money as you are to gain your money. So it can be very, very risky. So we're trying to do like a long-term situation, right? Long-term situation here. Nice. Awesome. Thank you, Stephanie, for leading us through all those different ways. Tell us, where can I start investing? How can I get involved?
Okay, so just like we've been like really highlighting throughout the entire time, that investing is really a process. You cannot get rich overnight. Um, and even if you've been investing for 2 to 3 years, 5 years, 10 years, always know that there's something new that you can learn, and there's always ways to like better yourself with investing, if that makes sense. So we did list 4 apps that you can download to start investing, which is E-Trade, Robinhood, which I know is pretty popular right now, Acorns, and then Ameritrade. So, and always remember that you should really research what works for you. Same like with the bank. You're not just gonna go with Chase because, oh my gosh, my best friend's with Chase. So always make sure that it's one, real, and talk to your parents to like really understand what is going to work best for you or which one you're going to benefit from the most. So don't just go with Robinhood because, oh, it's popular, I'm going to start using Robinhood. Or so yeah, just make sure you make a good judgment call here, because this is real money. It's not like I can put money in here now and nothing's going to happen to me. You're really putting your money at risk, and you can't just be messing around with this. Which brings us to our disclaimer. Okay, be mindful of who you're getting your information from and where you get it from. So most times, I know that right now, TikTok people, and then like Instagrammers and people on Snapchat, like all these influencers are trying to promote investments. Yeah, so they're trying to scam you. They're not gonna pressure you. Um, I mean, if they start to pressure you, there's always something behind that. Like there's always a reason why they're pressuring you. And most times it could be that, you know, they're doing some business with like Robinhood and it's like, oh, promote this for me and we'll give you this much. So there's always something behind the pressuring or behind the like when they start to push you. So with that being said, seek a financial advisor. This is real money that you're dealing with, so that you shouldn't just throw your money around and be like, "Oh, we'll see what happens." You can either make your current situation worse, um, so that really shouldn't be something that you're just messing with, because this is your actual money, this is your life, this is, something you don't wanna mess up. And it's kind of like saying that somebody who's watched all seasons of Grey's Anatomy is claiming that they're a doctor or, a surgeon. Are you really gonna let them operate on you just because they watched 17 seasons of Grey's Anatomy? Come on, like it really doesn't make sense. So really pay attention to who and where you're getting your information from. Research as much as you can. A financial advisor is always helpful. They do get that insight. They go to school for this, and they can help you on a personal basis because everybody's situation is different. If you have debt, your other bills and stuff, like anything that has to do with your money isn't something that you should really put at risk like this.
For sure. Like it's important, I think, to remember too when you see like someone's like posting like, oh, check out like my how my stocks are doing, or like if they're posing in front of a Lamborghini or whatever, like you don't know that that's their Lamborghini. It could be their neighbors. It could be stolen. They could have rented it. Like it's really cheap actually to look famous, or to look wealthy on Instagram. And so just be careful of the things that like are being promoted to you, and like check it out, see if it's legit. Maybe it's legit. Like I'm not gonna say that like I don't ever see something on TikTok and be like, whoa, that sounds cool. Just be careful to like take it a step further and like actually look it up, like look it up on Google, because sometimes people are really trying to scam you. So we for sure don't want that. Um, cool. Amazing. Thank you, Stephanie, for your presentation. Do we have any questions? Any questions out there about like how to get started, what it looks like?
Really quick before we like continue with the questions and stuff, even with Google, you really need to make sure you're looking at like reliable sources because you never know. I can simply just put something on the internet and be like, "Oh, this is legit because oh, I put it on Google, like it has to be true." Like it's not always like that. There's also websites that are simply for advertisement and promotion. So really pay attention to what you're looking at and who you're getting that information from. And at the end of the day, like your best choice is really a financial advisor. They do work with you like on a personal basis. So yeah, so just be mindful of that.
For sure. Thanks for bringing that up, Steph. Cool. Anything that we're thinking about, learning about? I know for me, when I started investing, you can start really, really small, right? Start really, really small and think about like, okay, I just put like $15 in my account, right? You could buy stocks. Some stocks cost $2, some cost $4, some cost $10, some cost $120, some cost like $2,000. And like some of the big, like try not to start with like the big names because they're going to be really, really expensive, right? So start with a small company, right? Think about like, I wonder if like this company is going to be good, because you're really like in it to play it for the long game, right? Like you're not just trying to like make a quick buck. You want to, I mean, some people are; those are called day traders. Some of my friends from college are in that world, but they spend like their whole lives trying to figure out how to play the stock market, kind of like professional gamblers, like David was saying. So if you like really love gambling and you want to try it with like real money, then you might be interested in learning more about like how the stock market works. I'm going to go ahead and drop this link in here one more time. I see most of you have it open from what I can see on Hapara, so appreciate you. And I just wanted to highlight again. So we have our notes are here, right? If you missed the last couple slides or you need to go back to them, you have your note slides here. This table is from slide 6, so you can click on slide 6 to check that out. And then you're just answering if you're going to start investing, what's something important to remember? Tell me one thing you learned today. And then you're taking the quiz. I think I saw Gracia already submitted, which is awesome. Gracia, you already submitted your quiz. I appreciate you. Gracia, did you submit on Canvas yet? You're about to. Awesome. Cool. So you're sticking around with me. You should be able to finish this up in the next few minutes, but you're sticking around with me until you are submitted on Canvas. That way we don't have anybody missing their work or anything like that. So I want to make sure that we have everyone's assignment turned in. Just go ahead and chat me when you are like done, and I will go ahead and check out your Canvas there. But we'll take a moment. If you have any questions, feel free to jump in. Steph and I are here to help. You can also message Stephanie on the chat if you'd like. All right, should be sticking around with me until you have submitted. Don't bounce, just submit. We'll make that happen.